You swipe your card. It's just $20. Maybe groceries, maybe takeout, maybe something small you'll forget tomorrow. But the system doesn't forget. That $20 doesn't cost you $20. It costs you time. It costs you interest. It costs you leverage you don't even realize you're losing. And if you don't understand this now, one day you'll wake up, check your balance and realize you're not just spending money, you're slowly selling your future. I remember the moment it hit me. Not when I got my first credit card. That felt like freedom, limit approved, bank trusted me, smooth plastic, instant buying power. No. It hit me when I checked my statement after ignoring it for months. Minimum due, manageable. Total balance, uncomfortable. Interest charged, shocking. That's when I realized the game wasn't built for me to win. Because here's the truth, nobody tells you about credit cards. They are not designed to help you spend. They are designed to help you stay in debt. You think you're using the card, but the card is using you. Every time you choose pay minimum, you enter a system that quietly compounds against you. Let's say you owe $3,000 at 24% interest. Sounds abstract, right? It's not. That's roughly $720 a year, just for the privilege of being in debt. And if you keep spending while paying minimums, you're not reducing the debt. You're feeding it, like pouring water into a bucket with a hole. Now here's the part that's even worse. The psychological trap. Credit cards disconnect pain from purchase. When you pay cash, you feel it. When you swipe, nothing. No friction, no resistance, no signal that says stop. That's not an accident. That's design. Banks know that when you don't feel the loss, you spend more. And when you spend more, you borrow more. And when you borrow more, they earn more. But the system doesn't just rely on you overspending. It relies on your optimism. You tell yourself, I'll pay it off next month. Then next month comes unexpected expense, car repair, medical bill, rent increase. Now you carry a balance. Now interest starts. Now you're in the system. And once you're in, getting out is harder than you think. Because life doesn't pause for your debt. Inflation keeps rising. Groceries cost more. Gas costs more. Your income? Maybe it goes up. Maybe it doesn't. But your expenses don't wait. So what do? You use the card again. Not because you're careless, because you're cornered. This is where the external threats hit you all at once. Layoffs don't send warnings. Markets don't crash politely. Emergencies don't schedule appointments. And suddenly your credit card becomes your lifeline. But that lifeline comes with a price. High interest, late fees, penalty rates. One missed payment and your interest can spike even higher. Now you're not just surviving, you're sinking. And here's the darkest part. Debt doesn't just take your money, it takes your options. You can't quit your job, you can't take risks. Because every dollar you earn is already claimed. You're working, but you're not building. So what's the way out? It's not what most people think. It's not just stop using credit cards. That's too simple. The real solution starts with understanding the system and then using it against itself. First, you stop treating credit as income. That limit on your card, it's not money you have, it's money you owe. The moment you shift this mindset, everything changes. You don't swipe because you can. You swipe because you've already decided how it will be paid, before the purchase happens. Second, you eliminate interest as fast as possible. Interest is the real enemy, not the card, not the bank. Interest. Because interest compounds quietly. While you sleep, while you work, while you try to fix your finances, it grows. So you attack it aggressively. Extra payments, side income, selling things you don't need. Not forever, just long enough to break the cycle. Third, you rebuild control over your spending. You reintroduce friction. You make yourself feel the cost again. Maybe you track every expense. Maybe you limit card usage to essentials. Maybe you switch to debit temporarily. The method doesn't matter. The awareness does. Because once you feel the money leaving, your behavior changes automatically. Now here's where things shift. Once you're out of high-interest debt, credit cards stop being a trap. and start becoming a tool. Used correctly, they can build your credit score. A higher score means cheaper loans, better financial opportunities, more leverage, but only if you stay in control. You never carry a balance, you never pay interest. You use the card, but you don't depend on it. And that's the difference between people who stay stuck and people who quietly build wealth. One group uses credit to survive. The other uses it to optimize. Same tool, completely different outcome. But let's be real. This isn't easy, because the internal threats are always there. Impulse, comfort spending, the need to feel better in the moment, the belief that it's just this once. Those are the habits that pull you back into the system, not the card, you. So you build discipline, not perfectly, but consistently. You question every swipe, you delay unnecessary purchases. You think in long-term consequences instead of short-term relief. Because every decision compounds, just like interest. Now imagine two futures. In one, you ignore all this. You keep swiping, keep paying minimums. 5 years pass, your debt grows, your options shrink, your stress becomes normal, you work harder but go nowhere. In the other future, you take control. You face the numbers. You make uncomfortable decisions. You cut back, you pay aggressively, you rebuild slowly. At first it feels restrictive, then it feels stable, then it feels powerful. Because now, your money works for you, not against you. That's the shocking truth. Credit cards are not the enemy. Ignorance is. Lack of control is. And the system will happily take advantage of both. So the next time you reach for your card, pause. Not out of fear, but out of awareness. Ask yourself, am I buying this with money I have or money I'm borrowing from my future? Because that future is coming, and when it arrives, it will either thank you and or charge you interest.